Welcome to Unlocking the Hidden Value of Your Life Insurance with Mrky and Rob Haynie from Life Insurance Settlements. This show is designed to help retirees and their advisors understand the basics of a life settlement. In this podcast, we show you how to get more from the sale of your life insurance policy versus lapse or surrender, and how using life settlements can increase assets under management. Mark and Rob ignite conversations on how to look for opportunities and navigate the life settlement process so you and your clients can enjoy a comfortable retirement. Now on to the show.
Hello and welcome to Unlocking the Hidden Value of Your Life Insurance with your hosts, Mrky and Rob Haynie. Rob, what's going on?
Not much yet. This morning, Eric, how are you?
It's a little early. Yeah, I'm fantastic. I'm excited because we've had a couple podcasts already, introduced you guys to the audience, what you do and everything. And now it's time to bring on guests. And you got one today. Mark, I know that you're going to introduce a guest. How are you?
I'm doing well. Everything's good down here in South Florida and hopefully warm and cozy where everyone else is located at today.
Uh-huh. Was that a barb, sir?
Well, I know things are a little bit different in Omaha, Nebraska, and where John's joining us from Denver, Colorado, than it is in South Florida. So we hope you're all well.
What are you guys talking about today?
Well, I wanted to bring John on. John is a owner of Colorado Brokerage Group, and they're a full-service brokerage and marketing agency out of Denver, Colorado. John's specialty is to provide his advisors with the best, highest quality life insurance, annuities, and long-term care products in the industry. And John and I came in contact, I honestly don't know. It was several years ago. And he's brought some great cases to me where we've been able to help the advisors that he represents and those clients that advisor may represent. In fact, I talked about one of those case studies, I think, on our last podcast, and we'll get back into today. But John, welcome from Denver, Colorado. We appreciate you joining us today.
Thank you, Mark and Eric and Rob. It's good to be here. It's actually going to be 70 degrees in Denver tomorrow, and then snow on Thursday. So pretty typical in the Rocky Mountains here. So appreciate you taking allowing me to be on the podcast here.
Yeah, absolutely. One thing I wanted to talk about is, we mentioned in previous episodes that you have, there's 500,000 life insurance policies that lapse every year. And that's just on seniors, folks that are 65 and above. And the life settlement industry on a yearly basis, we probably buy 3,000 to 4,000 policies. So you see there's a huge disconnect there. And John, from your standpoint, you're a brokerage general agency manager. You work with hundreds, if not thousands, of insurance advisors. Why do you think the industry, the life settlement industry, is held back? Or why do you think it's not commonplace for every single advisor to instruct or let their client know that, hey, if you're going to lapse or surrender your policy, if you're one of those 500,000 people that every year lets their policy lapse, they just surrender back to the carrier, why do you think the life settlement option is not presented as often as it should be? Thoughts on that?
Yeah, I think, Mark, I've been in this business a long time, got involved in the life settlement business, when it first came out in the early 2000s, and we looked at a lot of different cases. And I think that there's two reasons why I think clients and advisors aren't talking about this and utilizing this opportunity. I think one is there's still a confusion or a concern about somebody else owning a life insurance policy on your life. And going back to the Wild West days, and I remember even there were conversations about Colombians being involved in this business. And I still think there's a negative connotation in that regard. Why would I want somebody that I don't know to own it? Now, I think obviously you guys are going to, have changed that mindset, and there's more institutional buyers than there are private buyers today. But I think that's number one. And then number two, I think it's definitely an educational perspective. And I think that education not only goes to the advisor community, but I think also to the broker-dealer world, because there are many registered advisors whose broker-dealers prohibit them from participating in these transactions, regardless if it's a variable life insurance policy or not.
Yeah, and I'm glad you brought that up, John, because our industry, I've been in it 21 years. Rob's been in it for, 30 years.
30.
And Rob, you can add something to this if you want, but back in the early days, yeah, there was confusion and there was, I don't know if it's correct, concern regarding, well, who owns my policy? And the answer is this for everyone that's listening in. If you sell your policy in a life settlement transaction, an institution, a hedge fund, a pension fund, accredited investment type capital will own your policy. And I think I've mentioned it before. When you sell your policy in a life settlement transaction, you go into a portfolio, and now you're a name and a number within that portfolio. So you have every bit of confidence, every bit of you should not, I guess, be concerned about, all right, well, who owns my policy? I mentioned this on the last episode that Joey Bag of Donuts is the guy owning my policy. No, that's not the case. Our industry is an institutionalized industry. You've had big, large capital come into this industry that realizes that this industry is different than real estate, stocks, bonds. If you sell your policy in a life settlement transaction, that buyer is going to get the death benefit one day because the carrier always pays the death benefit out. But Rob, do you have anything to add with regards to the buyers and how they've changed in this industry over the last 20 years?
No, I think both of you hit the nail on the head. I was at a conference with the last executive director of Lisa, Darwin Baston, was on a panel with some carriers, and this came up. And Darwin had one of the best answers I've ever heard, and I use it all the time, which was, if you're comfortable going to sleep at night knowing that you just bought an annuity from John Hancock, then you should be comfortable going to bed at night knowing that you just sold your life insurance policy to an institution on the same levels as John Hancock. Maybe not quite as big, but big enough. The days of the Wild West that we talked about earlier, yes, those existed. I mean, there was a time in the early 90s when it was all individual investors. So if there ever was a time where that was going to happen, that would have been it, and it never did. So the last thing I'll add is that it's clumsy and obvious when it comes to trying to, if you will, investigate that crime. If that crime were to occur, it'd be very easy to figure out who had a motive to kill you, when and if you just change the ownership into an individual Joey Bag of Donuts in your case, Mark, and that the person died the next day and there were some donut stains on the ground. So at the end of the day, people have got to get comfortable with that. You're never going to convince everybody. We know that. We're fine with that. But the last thing that John talked about was education. There is a huge educational divide amongst what people know, what they don't know, or what, if they do know something, do they know the correct information? So right now we're working primarily on the people that have limited information and trying to educate them up to get involved. But at the end of the day, we think it's an option worth investigating. Ultimately, money decides most arguments, if you will. If the conversation is, would you like to have $100,000 in cash surrender value or $800,000 in cash? Usually 800 wins.
Yeah, John, and you mentioned this, and maybe you can enlighten us. When it comes to education or lack thereof with the advisors that you work with hundreds, if not thousands of advisors, educating them on life insurance, annuities, long-term care. Where do you think the disconnect is when we try to educate advisors with regards to the life settlement option? Are they just not wanting to listen? Or are they just not getting the information to them in a timely manner? What do you think that disconnect is? Do you know?
I think it's a combination of probably not wanting to know and it's not really understanding the math behind it. And I think that you've got to jump through a hoop, if you will, of getting that life expectancy, and they're maybe uncomfortable approaching a client and having that conversation and presenting, yeah, oh, by the way, your life expectancy is 3 years or 5 years. That's not a real comfortable conversation for anybody to have, quite frankly. And whether or not they believe they have to disclose that or not, I still think it's a tough conversation to have. And then second is just really understanding how the math works and is there true value in a particular policy versus not? I mean, if you have a $10 million policy and it's got $1 million in cash, is it better than $1 million, or can you get $2 million? And then the last component I think to that is, how is it taxed? How does it impact the policy owner when they do sell it? Because it's different than potentially surrendering the policy. And there's a lot of confusion around that as well. So I think those are the main things that, from my perspective and what I've talked to advisors about, where they get a little, yeah, okay, that sounds great, but maybe I'll just surrender it. I'll just, whatever the case may be. Now we've had some good luck, and I know we're going to talk maybe more in depth about the one case, but term policies are another opportunity that need education, and people don't understand exactly how that process works either. How can a term policy be sold? So, and again, we can get into the case of because that one case is, go ahead, Mark. Yeah. So
yeah, tell us more about that. Tell us more about that case that we did a few years ago, John.
Yeah, that's a really interesting case, because we knew we had a conversion period that was expiring on this case. And we approached the client and said, hey, you've got this $10 million life insurance policy. Would you like to convert all or a portion of it? And we even showed him a premium financing strategy around that to show him why or how he could, keep this policy going. And he ultimately came back with after conversations with his advisor and his CPA, and they said, we really don't need the policy anymore. Let's just let it go. And then that's when we came to you and said, Mark, is there a market for this? And we looked at the conversion opportunities, and we ended up, pricing it out. He had a relatively long life expectancy, if I recall. Mm-hmm. But, for a policy that had literally zero value on a $10 million face amount, I think we got the client about $500,000 net. And I think the advisor made a good amount of revenue on the conversion premium. So that's where, again, more education I think needs to be brought around that, because that's a good opportunity as well.
Yeah, and I want to address some of the points you brought up, and I'll tie in this case summary, because this case summary that we just did a year or so ago really kind of answers some of the questions you threw out initially. First case you mentioned, or first thing you mentioned, is mortality. It is and I've not had the discussion, but it is an interesting discussion when you have to start to talk to a client about their life expectancy. But the way I see it, and the way the advisor should see a life settlement appraisal, evaluation, is it really gives you, the advisor, and your client the most comprehensive view of why it makes sense to sell the policy, or why it may not make sense to sell the policy. And what I mean by that is, yes, we do collect medical records. The client doesn't have to go to the doctor. We do collect medical records. We do mortality studies. So we can go back to the advisor, and we do this. We have to share this with the client. It's part of our job, is to go back to the advisor saying, okay, we've done multiple life expectancy studies. Here's the average that we're seeing on your client, whether that's 2 years or whether that's 22 years. And those are kind of the buying parameters. But we've had cases where the client said, I'm perfectly healthy, I'm just going to drop the policy, yada, yada. Well, we go out and we do a study and find out the client's life expectancy might be 10 years or under. Well, in that case, maybe the client wants to hold on to the policy. Maybe they want to keep it. Maybe they want to keep making premiums. So in that instance, you gave this client this comprehensive view of why it makes sense to sell, or perhaps not. And when you look at John's case, he came to me, the client, I think, was 73 or 74. Client had some change in health, which in a life settlement appraisal, those make the best clients that have had some change in health since the policy was originally issued. Well, John's client had some, wasn't on his deathbed. I think our life expectancies were 13, 15 years or so. Now, the premiums on the $10 million policy were $480,000 to convert. So that math didn't necessarily on the surface work to get great offers. And even John said, Mark, we're not going to be able to sell this policy unless we put a sizable amount of money in the client's pocket. Well, we got creative on that particular case where we said, okay, if we need to put, in this case, $500,000 in the client's pocket, the buyer will take part in the term conversion commission, which I believe the buyer took half, and then John's advisor took half, which that's $240,000. So if you look at that whole scenario, you had a client, a high net worth client, that was walking away from policy, didn't need it, explored his options. And instead of just letting this term policy go for zero, we're able to do our valuation, and we gave the client $500,000. The advisor took part in the term conversion commission, which was around $240,000. And then that particular advisor, and I don't know all the details, he's the first one to sit down with that client and say, hey, you just got $550,000 from this life settlement valuation. What do you want to do with those proceeds? Which we can put them in an annuity, put them in long-term care, whatever you may be. So that one equation there really, yes, it's a morbid conversation, but in that conversation came an outstanding result. You took a client from zero to $500,000. And then when you mention your second point that, boy, you really don't know, should I do a life settlement? Should I not do a life settlement? The numbers are the numbers. What I mean by that, the average life settlement appraisal or average life settlement valuation usually returns 3 to 7 times the client's cash surrender value. I'll say that again, 3 to 7 times. That's a big number in most instances. Now, not every instance do we double, triple, quadruple the client's cash surrender, but if we're able to beat that number by a sizable amount, you've now really showed true value to your client, and you've looked like the comprehensive expert when it comes to this appraisal. And again, we've mentioned before, you can keep the policy if you don't like the offer. You can keep the policy if all of a sudden the mortality studies come back that show you're on the low end of life expectancy. That's your choice. We're just simply that option that an advisor like John and the advisors that he represents, that if they're not presenting it every time, I really think they're missing the boat. They're missing dollars for their client. They're missing dollars for themselves as an advisor, and they're missing their opportunity to do what they got into the business for, which is to represent their clients in a fiduciary capacity, show their clients all the options when it comes to buying life insurance or even selling life insurance. So taxes. Rob, you want to jump in on the tax side of it, or you want me to?
My standard tax question answer is, I'm not a tax professional. Please consult your tax professional and CPA for this answer. But what we do know from experience is that if you surrender your life insurance policy, you will pay ordinary income on the difference between that and your basis. So that we know. But if you settle that policy for more or greater than the cash surrender amount, the difference between the cash surrender amount and the amount that you settle for, you will pay long-term capital gains around 20% on that. Again, we want to highlight the fact that in many cases, basis is a big number in some cases. So you won't be paying any money on that return of premium that you've paid in. But you will, as John pointed out earlier in the conversation, that you will pay, there will be a tax consequence. But then again, making profits is in fact, you will be paying taxes on your profits that you make anywhere. So our goal is to try and get you in a position where you have to pay some taxes, because then we feel like we've done our job.
Yeah, I can say I've done, thousands of life settlement transactions. Rob's done 20, 30,000. And I've never had a client come to us and say, well, I don't want to do the life settlement because I have to pay taxes. Because in all instances, we're giving them more money than what the cash surrender value is. And yes, you'll have to pay a tax. Usually it's around 20%. It's long-term capital gains over and above your cost basis or cash surrender value. So that's just touching a little bit on taxes, which every transaction we do, we provide the client with the latest IRS tax papers. Not our opinion. This is the IRS, which again, IRS is going to have their hand out. Long-term capital gains is usually the tax basis on any life settlement transaction. So, John, do you think that kind of answers the questions on taxes when it comes to your advisor's perspective?
Yeah, 100%. I think that, it's not a matter, it's just a confusion. It's just, what does that, we're not going to surrender it. I mean, in this example of this term policy, obviously, if he let it go with zero value, there would be zero tax.
Correct.
The fact that he sold it for value, he had to pay some tax. And again, it's just a different conversation from an individual who sold a life insurance policy or an individual who bought a life insurance policy. That's the difference. And I think that we've always tried to do is, when we have that older client, we always ask the question, has your client had a change in health? And, when we're doing policy reviews, we're looking at older policies and identifying, is there an opportunity here? We always bring it up. And does it always, equate to an opportunity? No, not always. But in many cases, it can. And so.
Yeah, that's good information. John, I want to bring something up as we kind of come towards the end of the show here. You and I were talking, I think, last week, and you mentioned the carrier enhanced cash surrender option that a lot of the carriers, some of the carriers, are sending out to your clients or your advisor's clients. What can you tell us a little bit about that particular option?
Yeah, it's fascinating. I think that we're seeing more and more. We're seeing a handful of carriers offer clients the opportunity to surrender their life insurance policy for an amount greater than their current cash surrender value. And I think it is in response to, getting what they perceive as maybe a bad product off the books and and not having to come to you and do that. There has actually been, at least one carrier that even would do a life expectancy calculation and would change the offer based on that basic life expectancy. And, that number could, and they had a range, it could be, 20% higher than current cash value up to some number greater. And so, yeah, it's definitely, we're seeing it more and more. And in those situations, we did actually come, I think in some cases we came to you guys and said, hey, we've got a potential, enhanced cash surrender value option. Can you beat it? And in many cases, they weren't, there was no health change. There was no issue. There was maybe no reason to do it. But yeah, it's an interesting development in the insurance world, because I think they realize there's an assumption that if you buy it, the policy's not going to go away. It's going to stay on the books. And in many cases, they may not want that per se. They may assume that a certain percentage of policies will in fact lapse, which is part of their pricing model, I think, in many cases. So,
Rob, thoughts? What's our industry have to say about this enhanced cash surrender?
So we've been aware of it into 2021. My wife's father, my father-in-law, my wife's the trustee of his trust, was sent some information. No one can see this, but I'll show you. The enhanced cash surrender value option by Lincoln, where they offered him on a policy that was paid up an amount of money that if he sold for that day, he'd get. And Lauren brought it to me and said, what am I looking at here? And at that point, we began the discussions of, why are they doing this? And I think John nailed it perfectly. They're trying to get things off the books. I don't necessarily think it's settlements in total, but luckily, our industry association employs a gentleman by the name of Matt Chapo, Cat and Muchin of Chicago, former Illinois insurance commissioner, who is our man on the streets, boots on the ground, if you will, across the various states where this activity has taken place. And he's really beating it down in Illinois and others. There's others that are more difficult, Florida being one of them, California another. But he keeps bringing back, it violates the smoothness test, which is the non-forfeiture law, which is what really the regulators, how they regulate life insurance companies. They want to prevent. So if you have a class that someone's approached and say, hey, I want you to sell your life insurance policy, and you're offered a special number, offer, et cetera, or a range of numbers, but not everybody else who owns that life insurance policy is offered the same, you've enhanced instance, you're discriminating against the other people that weren't offered. So that's number one. That's the simplest one. Number two, the insurance companies are acting as a life settlement company in these cases without a license, which is a big, big violation, because we just say to them, so we don't need our license anymore. We're just free to do whatever we want, whenever we want to. And of course, the states will pat that down. So when I say the smoothest test, I'm going to read you what I wrote down, because I think it's important to understand what that means. So it requires a reasonably orderly sequence of increases in actual cash value. It can't be your cash got 100. Oh, now you have 375. Got to go up slowly and incrementally to everyone. Requires consistency of progression of the cash values. Prohibits sharp increases. I just touched on that in cash surrender value, and benefits available only during certain windows of time. And then, of course, policies should be disapproved or unfair or equitable, even if cash surrender value is equal or to greater than the minimum cash surrender value defined in the non-forfeiture law. So Lincoln, Sun, these were the first companies to do it. We haven't seen much lately in terms of new carrier activity, because quite frankly, they're not doing very well when this gets tested at the various departments of insurance across the country. But some are slower than others to act. But it is, you got to think about, go back to the education conversation we had early on. If you get a letter in the mail from the carrier, it says they'll give you X number of dollars now. That peace of mind that goes in that person is different than the person who's selling it to another person, because that policy's gone. You've got the cash, the policy's not out there. There's no incentive. So I think they play into that fear a little bit too. But again, go get a license. You want to do that? You want to get in our business? Fine, let's do it. But you gotta play by the same rules we do.
Yeah, and what I've seen, and I haven't seen a lot of these, but those cases that I have been instances where we have been able to beat the carrier's enhanced cash surrender. So we haven't seen hundreds of thousands of them, but I know they're out there. So if you're a listener, whether you're a consumer or an advisor, and you're staring at this carrier enhanced cash surrender offer, you're probably a very good fit for a life settlement. If you're 65 and above, have had some health changes, and all of a sudden your carrier says, hey, instead of giving you 100,000 your cash surrender, we're going to give you 300 on this $1 million policy. You're probably you are a very good fit to at least bring that policy to the life settlement industry, to a broker like myself, through to John, who brings me his cases, and have it appraised, because I'm seeing that most of the time, at least for the limited cases that I've seen, we're able to beat them. Period. End of story. If the carrier thinks they want it off the books and they're going to offer more, well, guess what? There's probably a life settlement buyer that says, well, yeah, we'll beat that number even more than what your life insurance carrier sees or offers you. So,
and I would just add, and John, you could probably finish this for me better than I'm going to say it, but when they look for these policies that fit a certain profile, and the profile in my father-in-law's case was he doesn't have to pay another dime for the rest of his life, no matter how long he lived, and that death benefit was guaranteed. So to get that off the books, by offering him almost double what he had in cash surrender value, would have been an incentive. But given that he didn't have to pay any money, he sees it as not beneficial to him and his needs.
Right. And I think, Rob, I think to clarify too, I think I think the insurance companies aren't just offering your father-in-law because of his age and the product. They're offering a class of individuals that same offer. So they are being consistent, just to be fair. They're not identifying that, oh, that policy is bad, I'm going to try and get that particular one. They are taking a class. And they're, let's face it, many insurance companies have made mistakes. They've mispriced products. And that either benefits or goes against the client's, either helps or hurts the client in the long run. And so in some cases where, from my perspective, if it's not an older age client or there's not an opportunity for a settlement, it's a good opportunity for them. They've also built in to try and, I think, combat what the life settlement business does, these return of premium options in 15, 20, 25 years out, which again are opportunities for clients to get out for a higher than, perhaps the cash surrender value as well. So, but no, you're right, Rob. I think that, that's, it is typically, a policy that's not in their best interest to keep going forwards.
And to add to that, I didn't say this at the beginning, but I'll say it. So as my father-in-law got that letter in end of 2020, his agent also got a letter that said, in the coming weeks, some of your clients who purchase certain guaranteed universal life insurance products will receive a letter from us informing them of their eligibility for enhanced cash surrender value. So they were in essence double teaming these clients,
right? Because
to bring behind them, like, oh, I don't understand this, in comes somebody like John to say, hey, this is a great opportunity. You're going to get triple your money. And I'm sure it worked. But I said at the time, when I saw this, which you can't see, that this 8-page brochure that Lincoln put together was the best life settlement marketing piece I've ever seen in my life. I've never seen anything better.
That's
you
awesome.
Could just take the word enhanced cash surrender value out and put the word life settlement, and it's perfect.
Yeah, I'm glad you said that, Rob, because it is true. And we're getting towards the end of our time here. And I do want to thank John again for, sharing his time. John mentioned that there is still confusion in our industry over who owns the policy, which we did address. This is an institutional industry. You got hedge funds, pension funds. Those are the companies, the large institutions that are buying your policy for the most part in the life settlement industry. John also mentioned that, there is lack of education. John, I'll ask one last question with regards to approaching you and your advisors. Is there a silver bullet, or is there something that our industry can do better to educate you and your advisors and their consumers out there?
I don't know if there's a silver bullet. I think it's just a matter of just continuing to educate, because I think I know that some of the big funders, as an example, one of the bigger ones is doing a meeting here in town in Denver, on with the local, I'm drawing a blank, the SSFP chapter,
Sure.
they're doing a meeting with them, again, trying to get that awareness out and so forth, which is great. I think what happens in a lot of advisors' perspective is they think they've got a case, they bring it to market, and it doesn't go anywhere. And so then they quit, and then they stop doing it because they think that's the only, if it didn't work one time, it's not going to work every time. So it's, and again, not every case works. And I think that that's like every other, what I'll call advanced strategy, whether it's this premium finance, split dollar, whatever the case may be, because I think that they're all kind of in that same world. They're kind of nichey. They're kind of, they got to fit a specific parameter. And not every advisor likes that. Most advisors like the fact that they can sell this product to everybody. They don't, there's not a narrow niche. So I don't think you got people out there looking for it, but I don't think they understand the end result and what the benefit is to their client if they fit that. Again, no different than a premium finance case or a split dollar case, or you name the different advanced concept. If it works well for the client, it's going to work really well if it fits for that client. And so, that's my perspective has always been, I'm not going to try and shove a square peg into a round hole. If it doesn't fit, it doesn't fit, right? I mean, but if it fits, it really fits well and it works well for everybody.
Yeah, I'm glad you said that, because not every life settlement ends up in a life settlement offer. And I tell advisors that the starting point with every life settlement valuation is a phone call. And on that phone call, I may turn you down. I may tell you, no, you don't have a client, and here's why. You don't have a possibility of giving a life settlement offer, and here's why. But by and large, I think when an advisor like John or his advisors can sit down with their clients and give this, as I mentioned previously, comprehensive view of why it makes sense to sell the policy or not, you're going to look like the hero. You're going to look like the insurance expert, which you already might be. Even if you're not an insurance expert, maybe you don't sell insurance. Maybe your main thing is stocks, equities, bonds, whatever it may be. You're going to look like the expert when you do a life settlement valuation, because we do bring you the life settlement offer. We may tell you, hey, the cash surrender value that the client or that the carrier is giving you, that is your best option. And yes, we do mention mortality, which is a good thing. I think in every life settlement valuation, you want to let the client know that, hey, you can pay premiums for this long based on your mortality. Here's your life settlement offer, or, another option out there. So, all right, everybody, I appreciate everybody's time today. I want to give, John McWilliams a big thanks for joining us today. John, if we have someone out in the audience that wants to contact you for life insurance, annuities, or long-term care, what's the best way for them to contact you, John?
2 ways: email john@coloradobrokerage.com, or on my cell phone, 720-936-8229. I have that with me all times. Would love to talk to anybody that would like to sell life insurance. That's what I do. I've been doing it for 30 years and I continue to do it probably for another 30. I don't see myself retiring. We'll see.
We need to get him a longevity study is what we need. Guys, this has been fantastic. You guys did great. I appreciate the time. One of the things that I was hearing throughout this, and I've worked with advisors for a very long time, and one of the sayings out there is you got to take time to sharpen your axe, right? And if you're taking time to sharpen your axe in this situation, you're reaching out to Mark or Rob and saying, hey, is this a possibility? Is this something that will work for my client? And they're going to give you those answers, yes, no, or why, right? And then you're going to learn as an advisor, you're going to sharpen that axe. You're going to be better the next time. You're going to understand it better the next time, so that when you do have another case that you think might be, you'll have better parameters to look at, and then you can bring it or say, you know what, this isn't going to fit because of my experience. Guys, I thought it was a great discussion. So Mark and Rob, I'm going to ask you the same question you kind of asked John. If people are interested in learning more, how do they reach you?
Sure. Everybody can always reach me on my cell phone. That number is 954-326-9378. I'm available from 7 in the morning to 9 at night on the East Coast out here. And then my email is markm@lisettlements.com. markm@lisettlements.com.
And just like Mark, you can reach me on my cell phone, 954-599-4433. I'm available an hour before Mark at 6 a.m. and an hour later to 10 p.m. And my email is rob@lisettlements.com. Thanks, everyone.
That's fantastic. Gentlemen, it's always a pleasure. Thank you so much. And of course, our last thank you goes to you, the listening audience. Thank you so much for tuning in and listening to Unlocking the Hidden Value of Your Life Insurance with Mrky and Rob Haynie. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when the guys come out with a new podcast, it'll show up directly on your listening device. And we humbly ask that you share this podcast, rate it, and leave a review, as this actually does help others find the show. Again, thank you so much for listening today. For everyone at Life Insurance Settlements Incorporated, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to Unlocking the Hidden Value of Your Life Insurance. the show that helps you unlock the hidden value of life insurance. Click the follow button to be notified when new episodes become available. Visit our website at www.lisettlements.com or give us a call at our office line at 866-326-5433, extension 1017. You can also directly contact Mark Mrky at 954-326-9378 and Rob Haynie at 954-599-4433.